Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Friday, the 23rd of November, 2007, and the market was open today for a shortened session. It's just closed, and the market was up. We had a rally of 1.67% in the spiders, and you can see here the most obvious thing, and I'm sure what they were talking about on TV, was the low volume. And, whether or not the volume was big or low, the fact is prices were up 1.67%. So if you were trading today and you had bought the market, then you did well for yourself. The market opened strong and really a little bit of profit taking initially. Maybe we sucked in some shorts, but then just a real nice, solid, steady uptrend until a little bit late in the day we saw a little bit of selling, but then it did recover once again. But held very nicely above that rising daily VWAP, and that shows us that the buyers firmly had control for today. Again, the volume was light, so that's what is going to get the headlines and most people's attention. But we did bounce, and again, price is the only thing that pays. You can see that the market did get back above this prior low right here. So maybe it's going to start to stabilize a little bit more. We have to put a little bit of cautiousness into trusting this strength just because of that light volume. And also the market did come up towards declining 5-day moving average, which is typically where we're going to find some resistance in the market. 144.5 to 145 continues to potentially be an area of resistance. If we look at the 30-minute time frame, you can see that we haven't done any damage to this downtrend. The downtrend is still firmly intact. Perhaps we'll get an inverted head and shoulders pattern to set up. Maybe we get a test of this trend line on Monday up near about 145 or so, a pullback that hopefully would occur on light volume, and then a breakout. That could bring us back up towards the 150 level perhaps. Let's not get too far ahead of ourselves and try to think bullishly, because the trend is clearly lower. And although the trend is lower, there are bounces within a primary downtrend, but we are in a primary downtrend, and that has to be respected. So if you're trading the long side, you're trading against the primary trend, and that puts the odds against you. It doesn't mean you can't make money, but what you ought to be doing, I think, is trading smaller share size if you are trading the long side, and be very quick to get out when they start to move against you, because the path of least resistance is lower, and these pauses in a downtrend tend to resolve themselves in the direction of the primary trend, which again is lower. Let's look at the semiconductors. They were up as well today, and they're starting to show a little bit of signs of bottoming in here. Now we've got some resistance, it looks like, at about 415. Let's take a look at the 30-minute time frame. You can see still a very solid downtrend here. No reason to think that it's turning around or made a bottom. Bottoms are a process, not an event. These little rallies in here, they can take the market higher for a couple days, but they typically will come back down and retest the lows. So continue to be careful in there. The IWM, we've seen that this market has tested its where it should have gone, basically, based on the head and shoulders pattern here in the daily time frame. They gave us a target down at 73, and also the head and shoulders pattern that we were looking at on what the heck time frame was it? Maybe the 30-minute time frame right here, yeah. And this was also giving us a target down at 73. We saw last week that level was tested a couple times. Friday it closed weak, but that that 73.25 level seems to be the most relevant level of support right now for this market. Breaking back below there could do further damage to the weekly time frame, which is already broken. So there's still a lot of problems for this market. Don't be too encouraged just because the IWM was up 2% today. The path of least resistance is lower. It came up to that declining 5-day moving average, and you can see in here that late in the day we saw bigger volume right up in here, bigger volume without further upside progress, really. So it looks like maybe some distribution up near that 5-day moving average. I think that the market has the potential maybe to make a more sustainable move higher if we could get it back up above 76. Above 76, then I think you've got the potential for, and that's this prior support in here as well, maybe we have a potential for a move up towards 78 again. The market is, again, it's very oversold in here, but oversold markets can continue to be oversold. You can see here that, on the 10-minute time frame, same thing. Maybe this is going to set up an inverted head and shoulders pattern. So next week, keep an eye on that 76 level. It seems to be an area of importance that, if broken to the upside, maybe we'll get some short squeeze action. But again, the primary trend is lower, so don't get too aggressive if you do decide to trade any such move, because the path of least resistance, again, is lower. We've got a declining 50-day moving average. We've got a declining 200-day moving average, and that means bear market. So bear market, you can get rallies, but they're usually short-lived, and you should only be trading if you're a super aggressive trader. The better bet is really to wait for those rallies to fail and then look to sell short. That's really the preferred way of being involved in a bear market. But if you're trading for a living, you're looking to make cash each day, then sometimes the long side is the proper scenario to look at. This market, the Qs, has a little bit of support down near about this 48.60 level. And today you can see that the 30-minute time frame, this market was up 1% today. Again, the obvious thing is the low volume in here, but it's just kind of gone more neutral in here. And the question is, with this severe drop and then just a pause, typically it's going to resolve itself in the path of the trend, which in this case is lower. So it's still making these lower highs, but now we've got some support in here. It just seems as though the Qs are really stuck in the middle of this little range in here. In order for the buyers to maybe take control for the short term, I think you need to see it above 50.75 or so. That's this high here. And you get a little bit of resistance up at about $50.20 as well. The weekly time frame, again, it still looks as though it just got sold off real hard and could continue to bounce. So I think the NASDAQ has really given us the reason for more caution than being aggressive long or short. Still a lot of mixed signals in this market and really choppy action. When you look at the last week and a half, just some real choppy action without really making any progress higher or lower.